Hey everyone, welcome back to our channel. Today we're going to be talking about a topic that's really important for anyone who wants to apply for loans, credit cards, or mortgages: credit scores and reports. Whether you're just starting to build credit or you've been managing credit for a while, understanding your credit score and report is essential to your financial well-being. So let's dive in. Section 1. So, what exactly is a credit score? Well, it's a 3-digit number that represents your creditworthiness. In other words, it's a numerical summary of your credit history and how likely you are to repay your debts on time. Credit scores range from 300 to 850, with higher scores indicating better creditworthiness. There are 3 major credit bureaus that calculate credit scores: Equifax, Experian, and TransUnion. Each bureau may have slightly different information about your credit history, so your credit scores may vary slightly depending on which bureau's score you're looking at. Section 2. Now that we know what a credit score is, let's talk about what factors go into calculating it. There are 5 main factors that affect your credit score. Payment history. This is the most important factor and represents whether you've paid your bills on time. Late or missed payments can hurt your credit score. Credit utilization. This is the amount of credit you're using compared to your credit limit. High credit utilization can indicate that you're overextended and can hurt your credit score. Length of credit history. This is the length of time you've had credit accounts open. Longer credit histories generally indicate more responsible credit behavior and can help your credit score. Credit mix. This is the variety of credit accounts you have, such as credit cards, loans, and mortgages. A healthy mix of credit types can help your credit score. New credit. This is the number of new credit accounts you've opened recently. Opening too many new accounts at once can indicate financial instability and hurt your credit score. Section 3. Now that we understand credit scores, let's talk about credit reports. A credit report is a detailed record of your credit history, including your credit accounts, payment history, and inquiries into your credit. You can request a free credit report from each of the 3 major credit bureaus once per year at annualcreditreport.com. It's important to review your credit reports regularly to check for errors or fraudulent activity. Section 4. If your credit score needs some improvement, there are a few steps you can take. Pay your bills on time. This is the most important factor in your credit score, so make sure you're paying all your bills on time. Reduce your credit utilization. Try to keep your credit utilization below 30% of your credit limit. Keep old credit accounts open. Closing old credit accounts can shorten your credit history, so it's often better to keep them open, even if you don't use them. Monitor your credit reports. Review your credit reports regularly to check for errors or fraudulent activity. Be cautious when opening new accounts. Only open new credit accounts when you really need them, and don't open too many at once. That's it for today's video on credit scores and reports. We hope you found this information helpful. If you have any questions or comments, please leave them below. And as always, don't forget to